Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your hosts Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to this Thursday, March 30th edition of Benzinga's PreMarket Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. Today's show is brought to you by Chaikin Analytics with their groundbreaking stock research tools, including their proven Chaikin Power Gauge rating and stock discovery engine. Chaikin Analytics simplifies complex investment decisions. We want to tell you also about a webinar being hosted today by Mark Chaikin and Bob Lang, who, if that name rings a bell, he's a frequent guest on Mad Money. The Key to Options Trades webinar is today at 4:15 Eastern. I'm putting the link into the chat right now. It's Chaikin Analytics /PreMarket. If you can't make that, you can sign up anyway and get the recording sent to your inbox. There is link in the chat. You'll learn how to create high probability options trades and make winning trades in any market condition with time exits before a price drop. So the Key to Option Trades webinar today at 4:15 with Mark Chaikin and Bob Lang. We will have Mark Chaikin on the show today at 8:15 to discuss some of those strategies, give you a little bit of a teaser to that. Also going to be joined by Eyal Moore. He has his own platform called Better Trader. He's going to tell us about that and how he can help your trading there. But we do have some news to discuss. Today will probably be the day of Lulu. What the hell happened there? We're going to figure that out with Joel, who's going to tell us first how the S&Ps are doing.
S&Ps are trading down 275 at 54 and a quarter. Developing some nice resistance up above, folks. 59.75. That was your high in Wednesday's session. 60.50 has been the high of the rebound. And the old 50% retracement of the whole breakdown from 98 to 1775 comes in right at the 58 level. So nice numbers above to see if we can continue to rally. You have crude trading in the red by only a couple pennies yesterday. Crude, a big leader of the market yesterday, as that inched up towards the $50 level. Gold down 420. Silver still holding over $18 at 18.18. So, Dennis, I guess you did not buy many yoga pants last quarter.
Not enough, apparently, Joel. Not enough. Yeah, Lululemon, your disaster stock of the day. But you know what? Before we get right into the report here, why did they give Lulu a pass? I mean, let's look here just to trading action last year. And we had the ridiculous run on Lululemon at the end of 2015, early 2016. We were trading around $45. And this stock ran all the way up to $81 in the summer. I know a lot of retailers ran up then, but that was actually right at the old high, just shy of the all-time high on Lululemon. And I mean, other retailers were, already kind of in shambles a bit. And they gave this one a huge pass here for a long time. But we've been leaking, and, we leaked here for most of 2017. It's $75, $70, $65. We had a nice run up there yesterday. And now the shellacking. Now it's down here at 53. But, man, this, just like we were saying, this market gets, the ball going in one direction. It's hard to break. And even if you were bearish Lululemon back in the summer, I mean, it's hard because the stock's just going straight up on you. Then, obviously, we had some news and the stock went down after that, but it was a big run up in the beginning of 2016, and that would have been your selling opportunity because obviously Lululemon is now following the rest of the retailers.
And during that run up here, and I can't remember what month puts I bought, but obviously I made a little bit of money on them after that day, in this area. But nothing major, I just got tired of it. I was waiting to fill the gap here. But once again, I would have had to go out way long term on that. I expected it to eventually fill the gap. Really interesting area that it's breaking down through right now. And I looked at this last night and I'm like, well, come on. These lows have to hold here. There has to be some support at the $54 area. There was a double bottom back in October and November before that big bump up. But they're not even giving this any respect here at $54. And it was It was only a penny miss, and I see the
Well,
guidance.
well, the guidance is what's killing the stock.
Give it to us.
Okay.
Give us the
All right.
details here,
Yeah.
Spencer.
So,
Really jump.
yeah, the Q4 earnings is not the problem here. The EPS for Q4 $1 versus $1 and a penny. So they missed it by a penny. Who really cares? Sales was fine. They beat that by $6 million. As far as Q1 goes, that's the problem. Their sales for Q1 guidance, they say they're expecting $510 to $515 million. $552 million was the estimate. So they missed the sales estimate by for Q1 by on the low end $50 million.
Yeah, that's scary. And, that's just showing you, like, maybe a lot of people thought that Lululemon, that people were still shopping as much there, and it's showing you that, it's all retail. Like, we've been talking about how bad retail's been. And, this is one that had been getting a pass and no longer here, and that's what it's playing catch up to what some of the other apparel retailers have done, because apparel has not had a good year. Or not, really it hasn't had a good couple of years here. But like we said, the stock got the big run up in the beginning of 2016, gave you a huge shot to get out of it, and now you're 30 points below where you were in mid 2016. Do you jump in here and saying, okay, now it's getting cheap, I'm going to buy it? I don't know, because this is retailers in so much trouble. It seems like every time you want to jump into one of these apparel retailers and you jump in, you get hurt. So I'm going to wait for the dust to settle on this thing. I think, like you were saying, they're not giving any respect to the 54, which, this market's just telling you it wants to sell. It's major volume already this morning. Already 451,000 shares have traded big volume last night as well. This thing, they want to sell it.
And how about the street leaning the wrong way into the report? Went from
For sure.
64 to 66. So that's adding to pain. I'll give you, we're trading right on the lows of the pre-market session here, right at 53 even. I'd just say 54. Look at this, not only on the daily, but you look on the monthlies here. 3 months in a row. So until you can even give it 55 and get back above there, if not, using your half and whole numbers, I don't want to say we're not going to save $50 today, but man,
it's possible.
Yeah.
We just watched it fall 13 points. You start getting down to 51. They like to take them to 50. They like to get them through the big hole numbers, hit some stops, and sometimes they reverse at those points. But I just can't see, we're talking how this market's to buy the dip, but that has not worked in retail, over the long run. You just have to look at the Macy's and the Kohl's charts, and obviously these aren't the actual, well, Lululemon has stores itself too, but, even looking at Ralph Lauren, it was $130 back in, October of 2015, now you're talking $82, so it's held up a little bit better, but it's just been a disaster since the summer for retail. Kohl's has been, it's down about 35% since then. Macy's has went from 45 down to 29. JWN had the big run up too, got up over 60. It's back down here at 45. These retailers have just been hit. That being said, so we just talked, dog the whole sector. That being said, in the last 3 days, retail has actually been starting to show some life. And I don't want, I'm starting to see a lot of other retailers trade down here on the Lululemon report. You're seeing a lot of weakness. Kohl's, if I look at my down filter, it's littered with retail stocks there. They're not down huge, but they're down. And I wouldn't be surprised if you have a few people who are maybe caught short in some of those other stocks, the peers, and potentially may, look at this as, a covering opportunity here, because there has been a little bit of a vicious rally. Like JWN in the last 3 days has ran from 41 to almost $46. Talking about a 10% run in 3 days. This thing pulls back a buck today. I think there'll be some short scrambling for cover. Kohl's, same story, Macy's. So long term, these things have been in trouble, but short term, they've been actually catching a bid the last few days. And I would not be surprised if you don't see the whole, like everybody comes in and see Lululemon down 20%. You think the retailers are just going to get shellacked across the board. They've already been hit hard. That's already happened, that story. Lulu's just kind of playing catch up with everybody else. So I don't know how much sympathy you're going to see, from a lot of the other makers. Like you see Under Armour trading down here in the pre-market as well. Full disclosure, I do have some Under Armour shares on right now, and also just in the pair UAA versus UA. But, it's had a big run up here too. And, you see it trading down slightly, but it's not down that much. And I think it's just because these stocks have already been hit.
And if you really have a penchant for trying to buy this Lulu today, keep an eye on that opening print and then see if you get, I doubt if it's just going to open and that be the dead low of the day. But if you get, let's say you get a 52.50 open, they flush it down under, under the 50 handle, and then they come right back above through that closing price. That might be, that may potential
I mean,
strategy.
that strategy just has a lot of merit. You taught me that strategy back in 1999. Here we are 18 years later. I still use it. That strategy of, opening the opening print and marking where it opened, a little bit of flush off the open, but then coming back up through the opening print. A lot of times you see follow through there and you never take any heat. That's a long-term strategy that's worked for a long time, Joel. I don't know on a Lululemon it's going to be a wild child, so that could be a different story. But that strategy has just worked for a long time, and that's a good one. And I thank you for teaching me that back in 1999.
All right, we got the PE here on Lulu. Could you look that up, Fuzzy's?
Spencer, you got that from the pro. Spencer, go hunt that down.
Yeah, I'll grab
It's
it.
a lot lower than it was yesterday.
I'll grab it in 2 seconds. Hold on.
All right, Dennis. Lulu takes the spotlight here for 10 minutes.
It does. Let's just talk, though, because Sears Holdings, just an incredible 3-day run, too. We were just talking. Well, I might as well just talk for the next 4 minutes, retailers, too.
Wait, do you want that PE?
Sure.
Forward PE is 25.7.
It's still pricey, man. You think
high.
about these retail stocks. You're playing catch up there too. And Under Armour, we saw the same thing. Like people were saying, Under Armour is cheap down here at $18 a share, but go grab the PE on Under Armour. What's the PE on that one? Not that we get all fundamental on this show. We usually tell you technical anyways. But when you start thinking, when you tell me a stock's cheap and you're just looking relative to price, well, let's see if it really is cheap when you look at, the company fundamentals and see, what it's trading at. Because somebody was telling me Under Armour was cheap, but I went and checked it out.
Forward PE on Under Armour is 50, about 50.
50! But obviously the earnings have been coming down, so the market's still banking it might come back up. But if you're telling me that stock is cheap and the forward PE is 50, it doesn't sound cheap to me, even though it's $18. It just tells me they were playing a crazy valuation when the stock was 45. So hard to jump in. The earnings could bounce back, and then obviously the PE is going to come down with that. But these earnings haven't been bouncing back for a lot of these stocks lately. So that's, you're gambling a bit on that one. So I have better home for my money. That's why I own almost zero retail stocks in my investment portfolio. I had Kohl's in there for a while. I sold it back in the summer when I had the ridiculous run up. Happy I did. And I'm happy not to be in hardly any retailers out of 70 stocks in my investment portfolio. Right now, I don't even know if I have one.
Yeah,
I'm trying to think about that.
Just some context real quick. The industry average for PE, forward PE, is about 14.7.
So here you are, Under Armour and Lulu, still trading relatively expensive, and the earnings are coming down. The sales are coming down. I don't know if I want to just jump in here. Sure, it's a buy the dip market, things bounce back, but retailers have not bounced back, as quickly, obviously, or at all in the case of, the buy the dip just hasn't worked, it seems like, in the retailers. But like I said, although the last 3 days, we have been coming back on some of these stocks. So I don't know if I'm jumping into Lulu today, but on a significant pullback on some of these other retailers, I might buy them for a trade, just a trade. None of the stuff is touching my long-term investment portfolio.
I think I was joking a while ago, and I said, just buy Amazon. Like, if you're thinking of buying a retailer, even though it's $850, $860, $875 stock this morning, that's...
new all-time highs again.
Yep.
It's incredible. Eventually, that may come back down to earth, too. I like somebody was saying on Fast Money yesterday, I don't know who it was, but they were saying, Amazon is like your safety trade. Well, maybe it is right now, but I don't consider Amazon a safety stock. So, it's had a huge run up. I'm not jumping in. I wish I would have owned Amazon back when it was $300 just a year and a half ago. Now it's almost $900, so it's almost tripled here in the last 2 years. The multiple on that is obviously scary, but, their sales are growing like crazy, so it always gets a pass. I'm not going to fight Amazon and come up here and short it here. It's at $874. I think eventually it could see $1,000 too, but from a valuation perspective, Amazon doesn't make sense for me either.
Talk about Sears.
Yeah, Sears. Well, and we talked about this yesterday. It's short squeeze. So this is your classic short squeeze. The short interest is huge on this thing. Everybody thought it was going out of business when it came out with that filing there a week ago. Stock goes down to 760, and it doubled. Or it's not doubled, but it got up to 1267. It's basically up 80%. Since then in 5 days, and people are probably banging their head against the wall. It's like, here's companies coming out saying they don't know if they're going to be, they don't know if they can survive, basically, is what they were coming out with, in that filing. And the stock goes straight up. And that's just an example of a crowded trade, catching more people shorting it off the day, that day. And I'm sure they were, because the stock gapped down that day. And then, it just started coming back. Stocks start going up on good news. That's a short squeeze. So, there you are. And here, it's a scary stock. If you, we're shorting it at $8 3 days ago. You are really hurting here this morning when it's at $11.50.
One quick comment here on Sears. We did back off the high We got into the 12 handle, closed 11.50. Pressure on the retailers today. I think I'd be more tempted if it went through this 11 buck area to try and beat up on it. But if it gets over 13 or near 13 again, I see a series of like 7, 8 highs in a row.
That got overdone.
Yeah, up in the 13 handle is going to be tough. So keep an eye on that. Yesterday's low is important as well. At 11.01, you got air. You can see that down to the mid 9 handle.
8:15 now. Time for our first guest. Yeah, I know, Dennis. Time flies when you're having fun. We got to bring on someone though who has been through every twist and turn this market has had to offer for the past 40 or 50 years. Mark Chaikin of Chaikin Analytics. He's created his own platform, his own ratings, his own metrics, his own a lot of stuff this guy's done throughout his career. So we're gonna ask Mark Chaikin about this market. We'll be right back with Mark Chaikin. And welcome back, traders and investors. This has been Zynga's Pre-Market Prep. I'm Spencer Israel, here with Joel Elconin and Dennis Dick. We're on the line now with someone who has been through pretty much every twist and turn that the market has seen for about 40 years now. Mark Chaikin, he's the founder of Chaikin Analytics. Mark, how's it going today?
Yeah, it's going very well, Spencer. How was you?
We're doing good. We're just trying to get a handle, trying to get a feel for how we're going to do today. So some background on you. You started your career over 40 years ago, and you a few years ago kind of came out of retirement to launch to start a new company that you call Chaikin Analytics, which is a research platform where you offer your own tools, the Chaikin Power Gauge, the stock discovery engine, several tools like that. Can you just tell us a little bit about the platform for people who don't really know about it?
Well, most people know me for my technical analysis indicators, particularly Chaikin Money Flow, which has been in the marketplace for 35 years. After the financial collapse of '08, I felt that individual investors were taking back control from their advisors because they had been decimated, and I really had an unfulfilled dream in my career to build a quantitative model based on fundamental factors, which is what institutions look at before they make investment decisions. And that was a year-long research project. It culminated in 2011. We call the model the Chaikin Power Gauge rating, and it really has done a wonderful job of helping people understand which stocks have the ability to outperform or underperform the market based on 20 factors that institutions look at every day. Big case in point, Lululemon, after the close last night, in the apparel sector, a lot of weak stocks there. Disappointing forecast for the first quarter. Stock is trading down 18% pre-market. Power Gauge rating, our 20-factor model, has been bearish for over 5 months. Steer away from stocks that are likely to implode, and your investment results just improve dramatically.
All right, so you are giving a webinar later today, 4:15 Eastern. The webinar is called "The Key to Profitable Options Trades: Finding the Big Winners and Losers." It's with you and Bob Lang, who is a frequent guest on Mad Money with Kramer. Give us a little bit of a sneak peek. What will you guys be discussing?
First, we're going to talk about the market. We are getting feedback from our clients that they're concerned and nervous about where the market's going. After a 25% rally from the February 16 lows, with the market having been up for 8 years, people are just not buying into this great advance, and I think that's a huge mistake. So we're going to start the webinar by giving people absolute proof that in a rising interest rate, rising earnings environment, the market can go higher. This is not a Trump rally in our view. This is a fundamentally driven rally. And then we're going to show people what I consider to be the key to profitable options trading. I ran an options department for 5 years, regional firm, tens of thousands of people trading options. 95% of them lost money. And the reason is they didn't understand the importance of what we call the directional edge. If you have this directional edge, and that's what the Chaikin power gauge rating gives you, you can successfully put on options trades with high risk, low risk, high reward. Lululemon's an example of that. We had a sell signal in Chaikin Analytics about a week ago on Lululemon ahead of this earnings report. When a stock has a bearish power gauge rating, there's your directional edge. It says stay away from the stock from the long side, look for opportunities to buy puts. And that's what we're going to be talking about on the webinar. We're also going to zero in on the key sectors that do well in a rising interest rate environment and those sectors that do poorly, because that's your overview. It's sort of your umbrella that helps guide your trading decisions.
So, talking about options a little bit, how do you use options in your or maybe if you don't trade anymore, how did you use options in your trading?
Use options for 3 reasons. A, to protect the portfolio. I don't think that's relevant right now because I think the market's going higher. B, to leverage an account, to take a small account and give you the ability to get exposure to expensive stocks like Chipotle on the downside, like Priceline on the upside. So with options, you can put on a trade that has predefined risk. Usually it's the amount you pay for the option or a bullish or bearish spread with big potential. And then options on the indexes are a way to really leverage your market view. So 3 ways. The one thing we never did when I was running an options department because they weren't available was trade these weekly options. And I think there's a big trap there. A lot of people are selling services. Some of them are well-meaning and they have good methodologies, but people used to say options were gambling, and I would say, no, they're not. They're really like an insurance policy. Options are veering more toward the gambling side if you focus on these weekly options, which give you 2 or 3 days to be right. They're a binary bet, basically. You either win or you lose. I don't like those kinds of bets. So options can be a very safe way to play the market. And then finally, you can use them to bring in income. So income is very important to investors. People are looking for high dividend stocks. I noticed Detroit Edison, which pays a 3+% yield, near and dear to the hearts of the Benzinga people. You guys must be keeping the lights on because Detroit Edison is trading near its 52-week high. People are buying stocks like that now, but they're also writing against it to bring in additional income. So income is probably the most conservative way to use options. So it runs the gamut from weekly options, which I consider near and dear to gambling, to more sensible strategies, a way to implement a directional, on the other end of the spectrum, very conservative, right options against stock you own to bring in income.
Will you be talking about using options around a volatility event, such as an earnings report or economic data or a Fed meeting or anything like that? Because that's a lot of what we talk about here on the show, is trading around an event like Lulu yesterday.
Well, I think options and earnings events are made for each other. Economic reports, I am not an economist, and if I flipped a coin, I'd probably be wrong more than half the time. But during earnings season, a lot of people shy away from trading because of the volatility. If you turn on the news or listen to the talking heads, everybody has a different opinion about what a stock's going to do, and the power gauge rating is that directional edge. So stocks with a bullish rating like Micron are more likely to report a positive earnings surprise. Therefore, you can put on an options position ahead of that earnings report, which will benefit from a spike up, because typically when a stock, even a stock that's at a new 52-week high, has a positive earnings report, the response in the market is that the public jumps in. So if you bought a call option ahead of that earnings report, when the public is buying rather, and you're selling at the upper reaches of normal volatility bands, it's a very easy trade. On the other hand, with a Lululemon, bearish power gauge rating, twice as likely to report a negative earnings surprise. And another reason we look at groups and sectors is that gives you a feel for what the broader trends are. And so the apparel sector has been terribly weak. I don't know if you've talked about Under Armour on the show, but Under Armour has been very weak. So using our new discovery engine, over the last month, every time I've made a webinar presentation, we've plugged in UAA, symbol for Under Armour, and immediately we get back 5 stocks with similar characteristics. In this case, apparel stocks with weak earnings, weak price trends, and guess what stock's always been on that list? Lululemon. So it was a constant warning that this is a stock you wanted to avoid, and I call it turning lemons into lemonade. If a stock is in a downtrend with a bearish power gauge rating telling you that the fundamentals are poor and the institutions are selling it, what do you want to do? Do you want to stand in front of a moving freight train, or do you want to hop on the train and try and make some money? And so we recommend option positions, in this case a put option or a bearish put spread, limited risk, the potential to make big, big returns. You get an 18% move to the downside overnight. Volatility is going to pick up in the options, which means the premiums of the options you bought are going to expand. And B, you're going to be able to take money off the table very quickly. Now, typically, when you get a negative earnings surprise, it takes about 2 to 3 days to work off. So if I had put on a position in Lululemon, as we suggested to some people, bearish position, you take half off on today's opening, pocket a very big gain, could be 200 to 300%, depending on the options you bought. Ride that next piece down for another day or two, and then close out the position, say thank you very much, and move on.
If you want to learn more about what Mark is talking about, you can check out his webinar today at 4:15 Eastern, the Key to Options Trades webinar. I put the link into our chat. It's also ChaikinAnalytics.com/premarket is how you can sign up. If you can't be there but still want to learn, you can sign up and get the recording. Regardless, if you've been watching our show on YouTube for the past few minutes, you've got a little sneak peek of what his platform looks like. It's Chaikin Analytics, and so Mark Chaikin and Bob Lang will be on today at 4:15. Mark, thanks so much for hopping on with us today. We will be in touch because we like your take on things. So have a good rest of your day and good luck today on the webinar.
Thank you, Spencer. Really appreciate the opportunity to speak to your audience.
All right. 8:28 now. Have we changed at all? S&P?
S&Ps are rallying here with crude a little bit. Maybe we'll have the Brentster see if he can find out. There was just a little nice spike up here this is a minute chart up here that don't have up very often, but getting close to that 50 psych level. So keep an eye on that, folks. 49.79, 50.14. That was your high on March 16th after the big breakdown. Before we cover our next stock, Jimmy North, who's new to the chat, was asking about Snap. And I just wanted to go over this real quick because it's a new stock. There's new technicals on it, but so far it's been acting pretty technically well. You had the high of 29.44 down to 18.90, right? That was a little over a 10-point move. We were looking for a 50% retracement, which would have taken it to the 24.70 level, and it did hit that in the pre-market one day, but it backed off. I believe Facebook coming out with new camera enhancements spooked the market a little bit. So what I'm looking at after I see something like this is I look for a retracement of the retracement. And from that low of 18.90 to that high of 24.40, 21.63 is the other Fibonacci 50% retracement. You had a low in Snap yesterday just below that level at 21.33 and closed at 21.55. So still keeping a real close eye on the 21.50 level. And Dennis, did I give too many numbers there? Did I explain
You
it?
gave a few, but I like the 50 of the 50 that you're talking about there. I mean, people look, out of all the fibs, those are the only ones I look at. I know there's other ones, and if they work for you, they work for you. But I've only just been a fan of the 50% retracement. I think there is merit to it, so that's something I do keep in my technical analysis toolbox there. Snap, we know I don't like the valuation. Long term, I don't know, but funny things happen in this market, so I'm not shorting it either. Let's jump over here just to a couple other stocks there, Joel. Just want to jump over into imbalances. I'll give you those just in a quick second here. Just jumping over into my balance window is now open. Alibaba 77,000 to buy, Pfizer 51,000 to sell. Bank America 37,000 to sell. The banks are a little bit weak here. If you want to see a sector here that's a little bit weak here today, just looking at it, Deutsche Bank is really getting killed here in the pre-market. It's down 50 cents. So my Deutsche Bank indicator tells me that the financials might be a little bit weak here this morning. But what do you think on the technicals in a stock like BAC? Because here we are. We had two big up days with it. And then yesterday we kind of just matched the high, coming a little bit short, 2 cents short, and then we sell off a little bit. What are you seeing in the technicals in a stock like BAC?
Just above in the 23 handle. Let me give you the exact numbers here. Institution sticking out there. Two highs right at the same area, 23.65, 67, 30 cents away from there. We'll see if we can make it a triple top. And the other thing I would say about this is even though the SPOOs and a lot of the indexes have recovered the 50% retracement of this break, Bank America is struggling to do that. So that make you be inclined that maybe the low isn't in for this move, 25.80 to 23.30. Boom, or actually, no, to 22.16. Let's call that a 3-point move, $1.50. I mean, you need to get up to the 23.70, 23.80 level for that 50% retracement. So not a great rebound, keeping an eye on the double top there in Bank America.
Let's jump into the other big news stock of the day, and that is ConocoPhillips here. We have them selling assets to Cenovus Energy, which is CVE, and they're selling a ton of assets, 17 billion worth, and that is notable here. Spencer, just give us the actual details here of what was announced between ConocoPhillips and Cenovus Energy this last night.
Yep. So this is yesterday after the bell. COP. Yeah, I'm sorry. Cenovus Energy to acquire ConocoPhillips 50% interest in FCCL partnership for about $17.7 billion. So that, I mean, to me, that's pretty self-explanatory. Do I need to explain anymore?
No, and you know what? I look at a lot of times when a company sells assets, it's a blip on the radar, and you think, okay, well, they get a little pop from this. But when I was looking at this last night, I was like, whoa, 17 billion worth of assets. And then, the first thing I do when I'm analyzing something like this, jump over to the market cap, see what the market cap of ConocoPhillips is, because that'll give you a feel for how much of the company that they're selling here. And you look here, ConocoPhillips market cap as the close of yesterday is $56 billion. So you're talking about 17 billion. You're talking about selling like a third of the company. So they're getting some big cash. They said they were going to come in and use a lot of that money for a buyback. I think 6 billion of it going right to a buyback right away. So that's why the stock is getting a big lift here. So obviously they're selling some assets at a premium here. And if you look, ConocoPhillips trading up 8% on this, and obviously the company paying the premium is trading down 8% on this. So one is up 8%, one's down 8%. CVE trading down 7.87% in the pre-market there at 12.04. So okay, let's go and analyze the technicals quickly on ConocoPhillips first. It's been a nice 3-day run for it. Now you get the big pop here, Joel. This is going right up against a big psychological level of $50. I mean, I think the pop is somewhat justified here, but I'm just concerned when you get a huge pop like this in COP that there isn't a few people who maybe, get a windfall here that would be likely to ring the register. Joel, the old mute check? You got to throw...
Okay, you got a lot of levels here in the lower 50 handle, so I would wait to see if, in fact, you could get to the three highs right at the 50.20 area, from 50.04 to 50.29. Above that, there's some other highs. To me, this is real key. If this is like just going to keep barreling higher, man, you're going to clear 50 and you're going to clear 51. If not, maybe expect a little back and fill on this one. Maybe look for some big orders in the book or something, but just a lot of highs there, and you haven't been up in this area. Well, it's been since February, so maybe this be the one if you're in it, you're long it, and you really want to ring the register. Maybe say move your mental stop up, maybe move it to 47 or move it to 48. So there you're not trying to pick the top, and you're kind of, locking in some gains as you go. When I look at the dailies and I see something like this with all the highs in one area,
Yeah.
man, and all those days that it did it too, and then you hit 51 right on the kisser. So it's definitely opening into resistance.
8:35 here. We got another
8:35. Time for our second guest of the day, E.L. Moore. He's the CEO of a company called Better Trader. I believe Joel and Dennis met E.L. at the Traders Expo. He is a quant guy. He's going to tell us a little bit about his platform, and we'll be right back with E.L. All right, welcome back, traders and investors, to Benzinga's Pre-Market Prep. I'm Spencer Israel, here with Joel Elconin and Dennis Dick. We're on the line with E.L. Moore. He's the CEO of Better Trader. E.L., how's it going this morning?
Very good, very good. Thank you.
Tell us a little bit about the platform, Better Trader, and what you guys do.
Okay. We help traders to analyze and trade profitably economic events. It's the moment that frustrating many traders because the volatility, and we figure out that there is very good opportunity in this moment of injection of volatility to the market. So we help traders to extract trade idea based on economic events, unemployment rate, GDP, natural gas storage, and so on.
Gotcha.
Traders, yeah.
Right. So, all right, I'm going to bring up your platform right now on our screen, and I want you to sort of walk us through a little bit about what we're looking at right now.
Okay. Can you see my platform now?
Yep, we can see it.
Very good. Okay. There is many economic events every day, all days. What you see, first of all, is the events. GDP, let's say, just released now. GDP, previous, expected, and the actual is 2.1. These numbers available to everyone in the market. Our proprietary tools, it's like to give you indication, surprise of 0.1 in GDP. It's a bit stronger, much stronger, or it's interesting. This kind of surprise, it's good. Everyone knows that it's good. Yes, it's a bit stronger. That's the first indication. Later, we have proprietary algorithm that backtested similar situation for GDP of the U.S. market with this kind of magnitude of surprise. And we generate trade idea for trader that's statistically backtested. It means that in similar situation like this event that released now, maybe there is good statistic to buy the Euro USD or to sell it and so on. And in this way, traders can get the ability to decide which asset to trade, in which direction, and how the market reacts in different situations, in similar situation in the past. That's the way professional traders, when I used to trade in trading room, that's the way that professional traders analyze and take in account economic event. They don't just monitor them or wait to the release and then say, okay, it's good, let's buy the S&P 500. They do a lot of preparation before, and those preparation take time with analysts and with researchers. So technically practically what are we doing is like you have team of 20 analysts that work for you, prepare the data before the release, because if you want to trade profitably, you need to prepare, not just to wait to the release and to trade it. So we help you to prepare. Once the release happened, let's say like German CPI released in 8 o'clock, 0.2 versus 0.4. This is extremely weaker. The normal trader going to sell the currency, the Euro USD. But when you see like statistically backtested trade idea, you get the idea that 3 out of 4 times the Euro USD was on the uptrend in similar situation. So maybe there is another explanation and logic why it happened. But first of all, as a trader, you want to know what is the statistics and if it's in your side or not. And as a trader, if the statistic is to buy, I prefer to buy it, not to be the smart one that sell because it makes sense. I prefer to join the logic of the market. So that's where we come to play.
So
statistically, yeah.
Tell us about your background. You have a background as a quant guy, correct?
Yeah, I started trade in 2004. Manually, discretionary under like proprietary trading firm, and by the time I convert to quants, so start to do more algo trading, cross correlation markets, mostly in the futures market of commodities, interest rate indices, currencies market, in these kind of fields, automated strategies, and we came up with the idea of Better Trader because we know the confusion that have, even in professional trading groups, there is a lot of confusion around economic events. It's stronger, but the currency not go down or up, and many strange things happened, like negative unemployment rate make the S&P to go up. In real time, you can get the idea from our system, 8 out of 10 times the S&P 500 was on the uptrend in similar situation to negative unemployment rate. So you understand that the market has some logic for this, and then you can act very fast.
So the core of your platform is learning how to trade around economic data. Who really is like the ideal audience here? Is this meant for like an active trader who trades forex? Give us an idea here. Is like who would get best use out of your platform?
Yeah, it's mostly active trader that trade for the short term, forex, futures, indices, leverage ETFs that correlated with the indices, but mostly forex trader and futures of commodities, futures of currencies, indices, bond markets, those kind of traders that want to capitalize on economic events and the other movements in the market. So we help them to make it more professionally from home or from office, whatever they have, without the need to more analysts and all of this. We automated everything.
And so what's like the biggest mistake that you see people make when they're trading these events or futures or forex or anything like that?
The first mistake, it's like some events happen. Let's say unemployment rate, it's negative. They automatically sell the S&P 500. Let's say they decided that the human logic of why something should affect something else, if this then that, not work anymore in the market. Today you need much more than to see some pattern on the chart. You need much more than just intuition of like human logic. unemployment rate. It's more unemployment rate. It's bad for the economy. So let's sell the S&P because it represents the economy. The market have some logic every time. And if I can say, the first mistake is that people see doing what they think that should happen, like with their logic. And the way to do it, as professional traders doing, is they have system. They don't just trade because they think. They're doing research. It doesn't matter if it's our system, our competitor system, your own system, but traders, new and of course experienced, have to apply some system to analyze, to collect the fact, to analyze, and then to react very cold. But it's easy to act very cold after you analyze, or you have some analysis about the fact and you know what are you going to do.
Eyal
So
Moore,
in
and
Sparrow,
yep, and he's Eyal Moore. His site is bettertrader.co. I'm actually about to drop in a little coupon code that Eyal has offered for listeners of the show. It's 66% off any plan. The code is right there in the chat now. PreMarket Benzinga. It's one word. PreMarket Benzinga is the code for anyone looking to use his platform, bettertrader.co. Eyal, thanks so much for hopping on today, and we will definitely be in touch about the future of your platform.
Thank you. Thanks for hosting.
All right, Dennis, can we get an update for us on how we're doing right now?
Just kind of hanging out. We have rallied here. I think crude is helping the way. I mean, if I'm looking at the sector that seems to be the strongest here this morning, it is crude. You can go and just look at the USO, trading up 1% here this morning. And then you just jump into the individual stocks, and they are green across the board here. Obviously, ConocoPhillips leading the way as they're getting that $17 billion payday from Cenovus. But all the other oil stocks are actually trading higher here as well, except Cenovus, obviously, because they've got that premium that they're paying out. So we're seeing strength in the oil sector. The banks are starting to come back around here. I know I said earlier they were looking weak here at Deutsche Bank. They have turned here as well now. We've had Bank of America go to the green. Morgan, Goldman have all gone to the green here, just slightly here. So it's a very mixed market here right now. Retail's still looking a little bit weak, but like I said, it's not that weak. And the reason that being is because retail's already been beat up. We've had a couple of strong days, and I do think there's some underneath demand from some of the shorts out there that were shorting the retail stock. So I don't know how much of a pullback we're going to see in sympathy with a lot of these other retailers, but other than that, though, we're just looking here, and it's kind of a quiet market, Spencer.
Quiet market, unless you're long Lululemon here, now down under $52. Dennis, I know
that 50 starts to become like a magnet when you start getting this close.
Yep. And can you imagine? Do you think there's any sell stock? I mean, not on the books, but with different brokers and stuff, you could have.
Oh yeah.
You could have sell stops off the open. I'm sure the margin departments are on high alert this morning, checking Lululemon positions. So a couple things to add to the selling pressure on the open. Three things I want to cover before we move on. First of all, Gamecocks was asking about the overall market here. And I just have a really good feel technically for where we're at. And I may sound like a broken record here, but we have had a 50% retracement. It's a little different because this is based a front month contract. But in reality, 23.58 is your 50% retracement. You have right now a series of 2 highs and a potential of 3 highs right in this area. So, man, we clear this 23.60, get into that mid-65 handle. I think we're going back up to the highs. If not, this is just the rebound of this break here, and we got more work to do on the downside. Also, Dennis, comments on IBM here. And boy, oh boy, this one really hasn't got off the mat since we made that low a few days ago.
Just hanging out, IBM, and some of the tech stocks have actually performed pretty well. They've obviously been hit here in February a little bit, but I mean Microsoft has held up very well. It's very near. Apple's making new highs. IBM's just been quietly leaking here, but IBM had a pretty good year last year. So I think it's a little bit of a digestion period because everybody at the beginning of 2016 was like, IBM, the story is over here. Went all the way down to $116, and then throughout 2016 just kept on climbing. kept on climbing until at the beginning of 2017 we got up over $180. So he's talking about Big Blue having, over a 50% move here in 2016. So I think you're seeing a little bit of digestion in 2017 just of that move. That's why you get the pullback here. I'd like to see the stock, if it gets back above 175, it's a big bogey. If you can give me a nice green candle there, I'd like it a little bit better. The one thing that's concerning is that we have had a pretty good pop here in the S&P the last couple of days, and Big Blue has not participated. So that is one concerning thing that I would say about IBM.
Yeah. Also, just keep an eye. I mean, if you're trying to pick a little bottom here or protect some profits, 172.09. That was a recent low of the move. So if you're looking for risk-reward ratio, you're risking a couple bucks here when, you could just do it. Looks like you had a 10-point move. But I think getting this back to 177, 178, your 50% retracement. But don't like that it was slow to react off the low. And then also Gilead. Man, Dennis, that stock we used to talk about all the time. And,
value trap. I got trapped in this one. Obviously, we all get trapped in stuff, and this is one I threw in my investment portfolio at $80, and it has not been a good performer. It's obviously leaked, and just knowing that earnings there, some patents expiring, some other issues there. Still has a lot of cash. They need to find some growth somewhere. They kind of are the same. They kind of remind me a little bit of how Apple was. Back at $95 when Apple was searching for a catalyst to get it going. Everybody was giving the hate on it too, and everybody hates Gilead here now as well. And, it hasn't been a good performer, and it still is a value trap. And until they figure out how to start growing their earnings a little bit, maybe it remains a value trap. But I like value. We know I got the Warren Buffett approach to investing. It was one of the first investing books that I read was The Warren Buffett Way. And in my invest portfolio, I stick with it. I like lower multiple stocks that, have value, that pay me dividends there. So, even in a down market, I get a little bit of the dividend protection. And it served me well for 17 years. But I've taken a lot of heat, on some of these positions as well in my investment portfolio. And Gilead is one I'm taking a little bit of heat on right now as I'm down 13 points from my entry position. But 3.09% dividend, at least I'm getting paid to wait a bit. And I think Gilead in the long run is still going to be a good one for my portfolio. Gamecock's asking how low I think it can go. Well, that's a whole nother thing. When you get into these value traps and earnings start leaking, I don't know. I can't answer that question here. All I know is, I'm diversified, and that's all about, what it is. Like I said, I have about 70 stocks in my investment portfolio. So you're never going to, when you have that many stocks, you're never going to be making money on them all. You're going to have some dogs. This has been a dog for my portfolio. Can it continue to go lower? Yeah, I'm sticking with it just because I believe the value is still there. That's the only reason, the reason I got into it at 80 was because I felt the value was there. I still feel there's value there, even though it appears to have been a value trap for me.
I would say, just hope that 65 doesn't get taken out. I mean, if you're trying on a swing trade here or a longer term, two lows at 65, 38, 43. So as long as it holds above there, I'd say it has a chance. I think also you have some hang from, what's going to happen with the new administration in the biotech. So that's something to keep in mind. Another stock, one of the first one that popped in the chat was Cabela's here.
Wow, what a move for that yesterday. Was there news? There had to be news on that yesterday.
Well, it's
Spencer.
more M&A. I don't know if you want to call it nonsense, rumors, I guess, is they're said to be in talks to sell their financial business to Synovus Financial. It's ticker SNV.
Okay.
That's according to the Journal. Under their proposed plan, Synovus would resell the credit card portfolio to Capital One and then retain about $1 billion in deposits held in Cabela's bank. Obviously, this is another chapter in the story that is the Cabela's merger with Bass Pro, and we saw what happened.
Is that
there.
Officially over, the merger with Bass Pro?
Yes, I think that is officially over.
Because they announced this merger, obviously, and the stock had the big pop up, Cabela's, you can see back in, I think it was October, and you can see the big pop when it went from $50 up to 63, and then, it just obviously didn't materialize. Maybe it was, I don't remember the reasoning behind it, I have my goldfish memory, but, it sold all the way back off, and now it looks like they're going to try to sell off some other parts of the business here. So obviously Cabela's wants out. They're trying to sell parts of the business, and it gets the big pop because maybe there's rumors that they're going to sell part of the business here. But I don't want any part of this. I mean, if you're buying stocks just because they got potential to get taken out, I want to own stocks that have good company fundamentals. And I see the size of those stores, those Cabela stores. They are the biggest stores ever. And we've been talking about retail and talking about how Macy's and Kohl's and Nordstrom are struggling because they're so big. They got huge overhead expenses there, and the sales aren't there. And you look at this Cabela's, the stores are twice as big. And and there's just so much inventory. I never see that many people shopping there. So fundamentally here, I don't like this company at all. So that's why I'm staying away from it. Could it get taken out by Bass Pro? Could they merge? Could they do some stuff? I mean, that's still on the table. That's the outlier, and that's maybe why I don't short the thing here. But I don't want this in my investment portfolio just because those stores are huge.
I just got some clarity.
Amazon eating the lunch of everybody, and that's a huge store.
I just got some clarity from Brent, who's been a little bit more in touch with the story than I have. So originally, right, with the Bass Pro Cabela's deal, Goldman was the original Synovus, if that makes sense, right? So Goldman was originally in talks to take the financial arm of Cabela's. That's now Synovus. So
okay.
It seems like
this could make the merger back on the table, maybe.
Yes.
Bass Pro merger. Gotcha. So there's still that possibility, and that's what I think. If you're buying this thing, that's the possibility. You're banking on potential takeout, and it could happen. But if it doesn't happen, if for whatever reason they can't get a deal done, I just don't think Cabela's has the business model that I want to own in my investment portfolio.
Yeah, especially in this environment.
That's in this environment. It's all about the environment.
52. We hit 52.04, closed on that high tick, but we're not back at that level. So really what you want to see is, get off this 50. It's consolidating here at 50, 80, 50, 51 even. You want to get back to that 52 and challenge 53. And there's a nice little double top over just at 53.32, 53.50. So, when you hit these kind of things materialize, you just want the mo to keep going. Just not to stall, and we'll see if it can take out 52.04. And I got a stock here, and we're gonna make this a group stock, and we are gonna pick the top in this stock, and we're gonna talk about it every day until we find 15 straight up days in a row. Dennis,
what stock?
FIZZ. I can't believe we haven't talked about this stock.
National Beverage Corp. And, this is one, we've talked about it before on the show, but it's been a long time. That's incredible. Look at that move in National Beverage Corp. I don't know what's happening with it, but that is an absolutely incredible move. And I guess if you're long this thing, I guess you stay a long time with a red candle, Joel. You stuck with it this long, right?
15 days in a row of trading higher.
Now that we're talking about this, will be the top.
13 out of 15 days, it's made a new all-time high. And all of those 15 days, it's made a higher close. And I didn't check out the lows, but it looks like it's made at least 13 out of 15 higher lows. So, man, oh, man, it got started. The company had like a small beat, and that, instigated that, the initial 6-point pop. And then it's just Chubbs asked me to take a look at this one, and I'm counting up. I'm like, what, 10? No, 11? So this has broken all my rules if we've had 15 up days in a row. Larry Glick had it on his list last week. Congratulations. I mean, I don't even think they have $200 million in revenues, but, man.
That's incredible move. What's the market cap on this company? Go find out. Go to the trusty Benzinger Pro. It's a race.
$2.72 billion. I was already there.
Holy cow, you're fast, Spencer.
I was already on it.
Benzinger Pro. You were ready for that question.
Yeah, I was ready.
Anyways, that's impressive. Yeah, so this is an incredible run here. Am I jumping on board this moving train here now? I don't know. Probably not. But if I was long it, I think I'd wait for the first red candle. I mean, these things happen. What is the record on the roulette wheel? Isn't it like 31 red in a row or something?
Yeah, I'm not sure about that, but
we got to Google that, and if whoever in the chat can come up with that, we'll give them 30 days of Benzinger. I think the roulette record is 30 days, 31 times in a row came up red or something. So, things happen. That's a 50-50 probability. The odds of that are so astronomical, but here you are, 15 or 16 up days in a row here. Trend is your friend.
Yeah, that's just I thought I'd like the chart. Dennis, kind of a sleepy morning here in the S&Ps. Now down $1.25. I've talked about the resistance up top. What any thoughts here? Had a nice day. Yes, really nice 2 days here. You're looking for the 3-day rally.
What are you talking about? I missed the
S&Ps,
stock.
the spoos, or go with
Oh,
Spider.
you're talking the spoos. He's jumped back around here on me. So
Spider. Go Spider.
I don't have a 3-day rule. So I have a 2-day rule, and I've never been able to come up with something that I found consistently for 3 days. So I'm not going to make a bet on what we're going to do on the third day. We know I like the whole reason behind my 2-day rule is you get the big move, and then I always say Johnny come latelys see the action at the end of the day when they come home from their day job. They see what the market did, and then they call their broker in the morning. They're like, get me in this market. That's why you get a 2-day move. The 3-day move, I don't have a rule for that one. So no opinion here on the 3-day rule. What I will tell you is this morning, the one sector that is still jumping out to me as being strong this morning is oil. Oil's trading up here significantly here in the pre-market. It looks like some money coming into that. The other sectors, retail looks a little bit weak, but I'm cautious because like I said, I think Lululemon's just playing more catch up with the other ones as opposed to, all these other retailers going to get killed this morning because of Lululemon. But they are trading red. A lot of the retailers are down here in the pre-market. I'm just cautious that you're going to see huge follow through. Maybe you do. Typically you would say when Lululemon's down 20%, that retail is going to get killed. But the reason I think that might not happen is I think a lot of that might already been priced into a lot of these stocks.
All right, Spencer, 9 o'clock. You want to wrap up the show?
Yeah, well,
preview the final show.
We got a couple guests on the docket for tomorrow. One is Chris Tyler. He is a portfolio advisor and options trader. And then we're also going to be joined by Brett Golden of iView Markets. He's another trader as well. So I hope you enjoyed our show today and our chats with Mark Chaikin and E.L. Moore. Mark's got his platform Chaikin Analytics. E.L. Moore has a Better Trader. If you want to learn more about that, you can go on either of those sites there. Please remember that all the information, material, and content from our show is for informational purposes only and not meant to be investment advice. That's it for us today. Have a good rest of your day. Good luck out there. We'll be back with you folks on Friday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.